It's kind of shady. I thought crypto was all about avoiding this type of shade, but here we are.
They popped off just like every other crypto IPO, right? It is crypto IPO season, and this is really only possible with crypto.
Welcome back to another episode of Network Spotlight, the Mick and Mike edition. I'm Mick, that's Mike. We've got some big headlines today to discuss, Mike, around stablecoins. This time, it's kind of shady, not gonna lie. It's a little bit shady. And I thought crypto was all about avoiding this type of shade, but here we are. We have to discuss it. It's not 100%, but there's a story, Mike, we discussed last week around Hyperliquid and the voting process. All right. So Native Markets officially claims Hyperliquid's USDH stablecoin ticker. We talked about Native Markets before, but honestly, I had no idea they even had a shot at this.
Yeah. I had never heard of Native Markets, and that's the reason because they think they're a newer company and issuer. So that's right. They kind of came out of the blue. For me, I kind of just glossed over them because you had other more well-known stablecoin issuers like Paxos, Athena, Frax.
Right.
Agora was there with a combined proposal for a bunch of other companies. So it was certainly a surprise.
Yeah, and what was the percentage? Wasn't the voting over 70% it was almost like a unanimous vote that this was the solution that the community wanted to go with.
There was definitely a difference. So the validator stake support was 71.5% for Native Markets, 21% for Paxos, and Athena had about 3.3% before they actually withdrew from the competition before the vote concluded. And so, yeah, like a resounding win for Native Markets on the validator vote side. But I don't know, it seemed like the kind of the Twitterverse and crypto Twitter and the community, it seemed like the sentiment was more towards the more established players, like you mentioned, Paxos and Athena, that got some part of the validator vote. So, Hasib from Dragonfly, he was tweeting over the weekend about how he felt this was a bit of a farce, that the timing was weird when Hyperliquid announced that they were doing this bake-off for USDH, that Native Markets proposal came out right after that announcement, while all the other stablecoin issuers were kind of frantically putting their proposals together over this was last weekend. And I think like I mentioned, the community, even Polymarket, seemed to think that the proposals from the more established players like Athena, Paxos, Agora, were better options as opposed to Native Markets, which is basically brand new. Like you said, we had never heard of them before. So it seems like maybe this was all just kind of decentralization theater, right? Community vote on who has the best issuer proposal, when in reality, maybe this was all set up for Native Markets right out of the gate.
I mean, what's the advantage for Hyperliquid to even be part of something like that? Any thought comes to your mind?
I think it's this decentralization theory. They can say, okay, we had a decentralized vote. We had multiple potential issuers in play. We just didn't, in a centralized manner, select Native Markets, just the Hyperliquid team doing it on their own. Again, it's that decentralization theater. And, now you talk about, there's a ton at stake here, right? This would have been a massive win for any of these companies, these stablecoin issuers to issue USDH. And, it's a bit disappointing that, again, it's still kind of speculation, but a lot of the signs point towards this being a very centralized, kind of a predetermined process for selecting the issuer of USDH.
Yeah, so much for decentralization. Speaking of, I know we're on the topic of stablecoins and some of the things to potentially watch out for. Over the weekend, there was a stablecoin that depegged by 80%. It was
Who was that?
something crazy. It was a Bitcoin-backed stablecoin on Yalla protocol. It depegged. And it just kind of goes to show you that while stablecoins are exciting. There's a lot of innovation happening around that. It's whether that be the actual code base, whether that be the way that they are collateralized, whether it be the way people vote. There's still a lot to be determined here, and always be vigilant, always stay cautious with all of this. But there's somebody that's in the news today, Mike, that is gaining ground, and it's around USDT. So USDT, we've known in the past to be the most adopted stablecoin in, globally, but there were some red flags around the regulatory aspect of it up to this point. And so what did USDT do? Well, they actually released USAT, which is the first stablecoin that is under the Genius Act. So this is like a major step forward for them to become more compliant.
Yeah, so on Friday, Tether, the issuers of USDT, made a push into the US, announcing a previously teased US specific stablecoin, USAT, that's designed to comply with the Genius Act. And there are a few interesting things popping up here. One, the project will be led by Bo Hines, who used to be the executive director of the White House Digital Assets Working Group, working under President Trump. And that's the interesting thing, right? You Tether with USDT has always kind of played in this gray area of compliance. They have purposely stayed away from the US because they never had their reserves audited by a big four accounting firm. They did not want to play the game under the prior regime of that was really against crypto. And now they're coming in full force with USAT. How will USAT comply with the Genius Act is one question that I have. But clearly, they've brought on someone in Bo Hines that is very much close to the current administration. So, I mean, kind of smart move on Tether's front. And but it still remains to be seen how this is going to be compliant, given there's kind of grayness on USDT. So that's one question I have. How will USAT interact with USDT? Right, like you mentioned, USDT is the leading stablecoin. It's got 170 billion in circulation. They've got massive distribution. Tether CEO Paolo Aldino said that USDT is going to help get USAT distribution somehow. And I'm just very curious to how he sees that happening. And overall, like, how is this kind of US stablecoin market going to pan out? USDC dominates right now, but we just talked about hyperliquid USDH. It's going to take a big chunk of that. In a prior episode, we talked about the numbers around how USDC is 95% of the stablecoin supply on hyperliquid, and that number will precipitously drop. So that USDH is going to grow, USAT is going to grow. Kind of everyone's launching their own stablecoin. Right? Like MetaMask has his own stablecoin, and Wyoming has his own stablecoin, and all these stablecoins are popping up. So how is this US stablecoin market going to pan out? So those are my three primary questions on the launch of USAT.
I was going back and forth this whole debate around, are we going to live in a world where there's going to be massive amounts of stable coins and everyone's
Yes.
going to be a winner? Or is it going to be the other way around? I don't know. I think that in any industry, winner takes all. And so I think right now they're fighting for market share. And I think eventually, once this matures, we may have a world where there's only, like 3, 4 major stable coins. You may have other ones pop up, but they're just not going to be able to have the distribution like Tether does to necessarily have the adoption. So I'm starting to side with that.
I think there are a few factors there. One, clearly regulation is going to be a factor, right? And that comes with kind of geographics, and right, like we've seen that the primary reason USDC got so big in the US because they were willing to comply with every rule in the US, right? And USDT was not, right? So USDT has much larger usage overseas, Southeast Asia, whereas USDC is primarily in the US. So, is EU going to have some different type of regulation that facilitates some specific stablecoin there? There have been rumors of them doing a CBDC, central bank digital currency. Is there going to be a dominant euro dollar stablecoin issuer there to fit that regulatory regime? I think that has a lot to do with it, and just the way maybe some governments want to kind of control the money flow into stable coins will determine it. So I think that will be a big factor in kind of how many stable coins we will have at our disposal.
Yeah, I mean, I was mostly referring to just the North American region, but you're absolutely right. I think with stablecoins being pegged to essentially fiat, naturally you're going to have governments that may not necessarily want to be able to, they would want to not incentivize you to use some of these other stablecoins and use their digital dollar or whatever their currency is. So yeah, there's going to be a little bit of that at play here as well.
Yeah, yeah, totally, totally. Kind of going back to the Genius Act and how USAT will comply. Another interesting connection is Tether's relationship with the Secretary of Commerce, Howard Lutnick. Like, Cantor Fitzgerald holds like billions of treasuries of Tether for U.S. treasuries for Tether, right? For that collateral. So like, there's clearly a relationship there between Tether and the administration with Howard Lutnick and Bo Hines. So yeah, I'm just, I think it's super interesting to see how really how USAT will comply with the Genius Act and existing regulations. But they've definitely have their foot in the door already to dealing with that with the right relationships.
Do you think that when it comes to those political relationships, would you say that this move with USAT actually puts Tether ahead of USDC?
I mean, you can't say that now, right? Like, you just, because USDC has 70 billion or whatever in circulation, right? So you just can't say that when USDT hasn't even launched. But the trajectory of USDC, despite Circle stock just popping off and continuing to rise, just like if you dig into the business models, if you dig into their relationship, their reliance on Coinbase for distribution, and of course the eventual launch of USDH, they're definitely on kind of a downswing, and there's going to be opportunity for others to come into the market and take market share.
We just got done talking about just the favoritism that's in the space and how there was, it's not as decentralized as we expect sometimes. And so I do wonder if this USAT move, if there are people within the administration are going to be essentially putting USAT in a better position than USDC. But people at the end of the day have their own personal interests in mind, and we'll see if any of that plays out here moving forward. But you did mention the Circle IPO. You're starting to see more and more of these crypto IPOs pop up. We've discussed them on previous show before, and the latest ones are Figure and Gemini. They lead 1.2 billion Bitcoin IPO bonanza.
They popped off just like every other crypto IPO, right? It is crypto IPO season. Figure raised $787.5 million in their IPO last Thursday. They are a blockchain-based lender. They created the Provenance chain. The founder of Figure, previously founded SoFi, it's one of the largest lenders out there. So the offering was priced at $25 per share, opened at $36 per share, closed its first day with a 44% gain and valued around $7.6 billion. One day later, Gemini, the crypto exchange founded by the Winklevi, they raised $425 million. Shares jumped 32% upon its debut. It's valued around $4.4 billion. The IPO was subscribed by about 20 times. So clearly, it's crypto IPO season, and that got me thinking. Man, I got me thinking about a couple of things. How come TGEs suck so bad? TGEs in crypto have been terrible. Outside of aforementioned hyperliquid, there have been a bunch of TVs, and it's been down only for a lot of them. There's the high FDV, low float trend that's been pretty bad for a while. Essentially, these protocols launching tokens at a very high valuation, and then then the earlier investors dumping on retail. Whereas these companies going public are popping 44% in a day, and Circle was like just popped up like 80% or whatever it was, and then they've been growing and growing, right? Like, there is certainly something to be said about how these IPOs are designed versus the terrible way that TGEs are designed. And I think there's a lot that goes into these kind of tokenomics and designs, and the big day of a protocol launching their token and doing a public sale. But yeah, there's certainly a ton of improvement and a lot that I think we can learn as an industry from how these IPOs are designed. I think it has something to do with kind of like identifying who the retail holders will be, right? Like the long-term retail holders, right? A lot of time these TGEs, first of all, what are your thoughts on that? On kind of the
I
TGEs
agree.
sucking bed? Yeah.
Yeah, and it's so ironic because we work in this industry where we feel like we have an edge because we understand this technology, and therefore we're able to apply this to some of these crypto projects that do tend to be more risk on, but because a lot of us have the knowledge, we're able to gain the benefit from that. But we're not really seeing that right now. Like, a lot of the attention is on these crypto IPOs, and I think the industry as a whole is just, it's more mature. There are more eyes on equities. It's more regulated. And I think naturally that translates to, they're not necessarily doing it in a way that screws retail over. If they are, it's not as obvious, right? Whereas in crypto, many of us still feel like we're in this industry where it's small, it's secluded, and you can do so many things. It's a wild west, right? And naturally, I think that party will stop. It's just a matter of at what point does it stop? At what point do we get to where whales are not necessarily taking advantage of the retail traders? But, I think that will come with the industry maturing.
Yeah, I think also there's a lot to be said about farming and the farmers that people that are essentially getting kind of early to using these products before the TGE, and they're not long-term holders, right? They're farming the token for points or whatever it might be, and then when the TGE happens, they get their tokens, and then they dump and take their money. Now again, that is there's a lot of design that goes into that, right? Like, I think tokens are always are a great way to incentivize people to use your product and try your product, provide feedback. But yeah, that kind of farming is a lot of so take the other side of the IPO. There are these salespeople at the banks who are underwriting these IPOs, and they're going out and they're selling the stocks to other banks or whatnot, other investors, hedge funds. And for the most part, like, those are buyers of this stock that want to hold for a relatively long term and see the price go up so they can make money. And they are identified as these kind of like somewhat long term believers, which is the complete opposite, right? The farmers are the exact opposite of long term believers, right? So there's a way to help identify those kind of like long-term buyers, and whether it's retail or hedge funds or whatnot, institutions, a better way to do that and have a similar sales process, token sales process for the TGE as banks have for the IPO. Maybe that is one part of the solution. I don't know.
I do think that in general, the industry is trying to think about, okay, how do we get more people holding on to the tokens? And the one prime example that I can think of, ironically, is actually Pump. Pump.fun. And we've talked about them before, Mike, and how they're kind of like considered to be an extractor in this industry. And, some people refer to them as a parasite because you go on there, you make all these tokens, and it's just like a casino. Majority of the people, we even had like some insane statistic where like over 90% of the people lose money on this platform. And so I think that, people like Pump, like they're thinking about, okay, how do we get people holding on to these tokens more? So they've actually made a few adjustments. First of all, the Pump's token surpassed 3 billion market cap. And what they do now is they have a 50% revenue sharing with coin creators. So you go on there, you live stream, and they share the revenue. And they're taking on like Twitch, Rumble, like they're taking
Yeah.
on some pretty big players now.
Yeah, they've shifted
And I'm not
a lot to streaming. Yeah.
they have shifted, and I think this revenue sharing model, it could be a good way to incentivize that more of that like long-term approach and versus I'm just here for the quick gains and then I'm out.
That seems good for the creator, no doubt about that, right? And I'm trying to think of like how is that good for the creator's fan base who will buy the token? That's that.
Mhm.
There's a lot of kind of like reputational risk that a creator takes by moving from Twitch or YouTube, a streamer, to Pump. Yes, they could certainly monetize it easier, and this is a better, with this revenue share, it is a way to monetize that a little bit more. But like the reputational risk is if like they launch a token and that token goes to zero, right? And their fans just lose a ton of money.
Honestly, I think the more reputation risk is on the whoever launches the token because
Right, the creator,
they're
right?
out there. Yeah, like they're out there. They're trying to create this like community. They're launching this token, and so I think that there's still a lot of risk for the user. But I think the main thing is it's not just like some keyboard warrior that's sitting behind his keyboard. You have no idea who it is. You can get a sense of their personality. You can get a sense whether or not they're in it for the right reasons. So it kind of puts the creator and the user in a better relationship, right? It's the same way if you're trying to figure out is Deep Ventures going to invest in project XYZ. And if you never heard, if you only read about them, you're less likely to invest in them versus if you were to hop on a few calls, kind of get it, build a relationship with them. So I think the main thing here is the relationship aspect. And it doesn't necessarily diminish or like remove all risk, but it does create that relationship and potentially holders that appreciate certain content creators may want to hold on to that token longer.
Yeah, that could be right, and I guess like if the platform is sharing 50% of revenue with the creators, they are theoretically less likely to just dump their dump on their followers. So yeah, I think that does make sense. I still think that there's like with those people with a large a good reputation, they've been streaming for a while. There's certainly a reputational risk on going with Pump. But again, like look, there's way these are like better ways to kind of identify your true followers, right? It's just like you just kind of got to do the right thing to not just like dump on them. And yeah, I mean, I think that with Pump sharing revenue, that lowers the chance that these creators will dump on them. So I think it's a smart move.
Yeah, and next episode we'll go on Pump.fun and stream, and we'll have a Mick and Mike token. Let's do it.
Let's do it.
All right, Mike. Here comes the fun part of the show where we go over 3 different projects that secure some serious funding. You come out with a newsletter once a month. It's on deepventures.io. People can check it out, where you share with us the cutting edge technology. And this week we're going to start with Inversion.
Yeah. So before we jump into Inversion, I really like the 3 fundraisers because 2 of them are taking the approach of going to where users already are. And then the third one that we'll go over takes an approach of things that are really only possible with being crypto native. So like two very different approaches, and I love them all. They're all very interesting, but like I think it's just cool to kind of to compare and contrast those two very different strategies. So starting with Inversion Capital, Inversion Capital started by Santiago Santos, who's an OG in the space, a very active angel investor, and he used to be a VC at Parafy Capital. So he is launched, or he's raised for his blockchain-based private equity firm. Inversion Capital raised 26.5 million in a seed round led by Dragonfly, a participation from Van Eck, Lightspeed, Parafy, and many others. So the reason why it's called Inversion Capital is that like usually what we're talking about is like a lot of people are building products, crypto products, and then like trying to get users. So what Inversion is doing is they want to acquire traditional businesses, industries like telecom and banking, then integrate blockchain technology into those businesses and essentially convert all of those businesses users to essentially crypto users. And their aim is to like make crypto invisible for end users, but improving those businesses with the blockchain, higher efficiency and margin. So I think great name, Inversion Capital. So they're also launching an L1 on Avalanche that will serve as the foundation of the strategy. I'm curious to see how that gets integrated. I guess maybe like they will bring their first, that legacy business onto that L1 on Avalanche. But certainly, kind of flipping the model, right? Instead of building a product and finding users, you're essentially purchasing a company with users and improving that company with blockchain, integrating it so all that company's users become crypto users. So
when I first read this tagline real quick, Mike, real GDP on chain, I couldn't help but think, are they trying to ride on the news recently with like, Pith Network and Chainlink? So that was like my first instinct. But I mean, now that you explain it a little bit further, it sounds interesting. And look, I think that the fact that they chose Avalanche is another piece to consider, right? We talked about on the show about certain institutions choosing to build out their own chain, and a lot of Ethereum people are like, hey, why not an L2? Meanwhile, you have, people like Inversion that are building a subnet on Avalanche. So let's not sleep on Avalanche, right?
No, Avalanche has been doing a lot of good things. They've been certainly one of those, all L1s that have gotten some real traction, and they've got a lot of support. They've got a lot of like kind of institutional inroads. So yeah, they're definitely doing great things.
Next on the list is Chatterpay.
Yeah, so I think this is kind of like under the radar. So it's a crypto wallet inside WhatsApp. Chatterpay, they closed a strategic round led by Scroll, which I haven't heard from a long time. They're apparently still funding companies. I don't even know if they're still running their L2, but the amount raised is not disclosed. Essentially, Chatterpay enables users to easily send, receive, and manage crypto through WhatsApp chat messages. So send Mikhail $5 worth of AVAX. In the same vein as Inversion, they're meeting users where they are already, right? WhatsApp has 3 billion monthly active users. Instead of building a brand new app that has crypto in the background, you can send money. There's a ton of apps that do that. We see decks for those apps, and some of them are very interesting, taking very unique methods. But Chatterpay is taking the method of saying, hey, we are going to integrate into an existing app that has billions of users monthly, and meet them where they're at.
So I think I mentioned to you offline about another startup that not only can you do it within WhatsApp or Telegram, you can actually do it directly within like iMessage.
Yeah.
And there might be some limitations in terms of what kind of currency you're sending. And I don't know if Chatterpay maybe doesn't. And so maybe there's like some pros and cons to both. I feel like we're stepping into this like other vertical now where there's going to be a lot of these popping up that are going to be going places where we're already communicating. and saying, look, this is going to be a seamless way for you to send payment directly, whether it be through your iMessage, whether you're on your Android, WhatsApp, clearly. So I feel like there's another race forming here that it's not mainstream yet. There's not a lot of buzz around it, but there's one that I'm seeing just as somebody that works in the industry, and you do as well.
Yeah, and that's and essentially how like Ton got so much hype, right? With their integration into Telegram, and it's and now over a billion users. I think we're still seeing that come to fruition in terms of usage. I think it's still early. Distribution, right? It's distribution. If you've got the ability to hack distribution, the ability to use existing platforms to get that distribution, smart way to go. But there's always a risk of that centralized, if that platform is centralized, that they can cut you off, right? There's so many use cases of the early social media where Farmville was like on Facebook and they grew immensely, super super fast, and then Facebook just turned off the API. People, there were a lot of apps on Twitter in the early days that they were leveraging that platform for growth. Twitter just turned off the API or severely limited it. So there's always an inherent risk in doing that. But yes, I do believe that having kind of experimenting with these new onboarding methodologies and familiar user experiences that we're all using on an everyday basis is a very smart way to onboard new users to crypto.
Yeah, and so with like Apple Store, what's stopping them from increasing the fees, right? If they're seeing that
Exactly.
these applications are generating a ton of fees by doing this, or
30.
maybe they'll say, "Well, thank you for the game, thank you for the blueprint. We're just going to go ahead and now have one that we are going to like embed in our own phone."
Yeah. I mean, I think more for physical goods, but you see that with Amazon, right? Like they, if there's a product that sells really well on their platform, they have got massive distribution to millions and millions, of, if not billions, of users. And if there's a product that's selling really well, Amazon does and makes an Amazon Essential or whatever they're called, essentially copies that product at a relatively cheap cost, and boom, now they're the number one seller of that product, right? So there's always that risk of that centralized platform taking advantage of their power and distribution, and kind of they collect all that data on what is successful going through their platform, and they're able to replicate that many times, and take the lead from these upstarts.
So super risky from an investor perspective, very good for adoption of crypto. Love it, love it, love it. Last but not least, Wildcat Labs.
Yeah. So this is the one that is really only can only be done in a crypto native way, right? Like under collateralized lending is like the holy grail. And Wildcat Labs creates the Wildcat protocol. They raised 3.5 million in a seed round led by Robot Ventures with participation from Triton Capital, Polygon, and others. So what they do is they enable customized under collateralized DeFi credit markets on Ethereum. They target institutional borrowers and create new access to on-chain private credit. So borrowers can kind of go in and say configure their loans how they want it. So they're like, all right, set the APR, the collateral reserve, which can be zero, set their terms. And then on the other side, there's lenders that see kind of all these options of what they feel comfortable with. They deposit assets into these markets, and then they receive these debt tokens that rebase over time to represent the principal and interest owned. So they do not exist in the real world. They do not exist in TradFi. And this is kind of what is really only possible with crypto. And this is really the opposite strategy of Inversion and Chatterpay in building a product that can only exist natively.
That's a lot of fun. And that's where I feel like real adoption happens. And speaking of adoption, one last thing I want to point out, I finally got my Solana Seeker in the mail.
Okay,
So I'm going to be
nice.
checking this out. I'm going to play around, and then I'm going to come back on the show and I'll share my insights to see if it's worth it. The main thing I'm going to be looking for is to see, can it actually make it really easy for users to get involved with crypto, or is it still more for like people in the industry?
Right.
That's what I'm going to be looking for.
Cool,
So
man. Yeah,
I will
that's
report
cool.
back.
Yeah, awesome.
Yeah.
Looking forward to hearing more about that.
Awesome, man. Well, great show as always, Mike. People can check you out on X, on deepventures.io. Like I said, the newsletter, I'll include those links in the description. And for those that are watching, if you found this video helpful, please give it a like, subscribe to that channel, and we'll catch you guys in the next one.
See you, everyone.
If you're a founder or operator in Web3 and want to connect with others like you, head on over to networkspotlight.io and apply to become a member. See you on the inside.